Sub traders, it's trades here. Let's do a quick walkthrough of what happened today, Monday, 15th of September. We got FOMC on Wednesday and pound policy bank rate on Thursday. So going into the week, I'm bullish. We've had bullish order flow for a while, especially last week. We pulled back into this range, held this fair value gap, this other fair value gap inside that range with this bullish engulfing candle, and then came back and tapped into that bullish engulf fair value gap, and then start to push up. So going into today, I was bullish, but because it's Monday, I didn't really want to look for any opportunities to go long. One of the main reasons for me for wanting to go long this morning was after seeing this market structure shift on the 60-minute time frame. As you can see, last week price pulled back into this range, tapped into that 50% at that daily time frame fair value gap, and it started to push up. On the 1 hour time frame, we had loads of liquidity grab, right? We had quite a lows being taken out as price came down Friday, which is where I longed. If you watch my video on from the trades from Friday, we came down, right, took out a low, took out another low, tapped into that 50% at the daily time frame value gap, displaced up, and then when I saw this market structure shift this morning, price coming into a swing low, that price formed, came and grabbed liquidity on the 15-minute. My prediction was that we might actually pull back into that 618 and push up to these highs. I didn't want to trade it because it was Monday morning, but that was my prediction, mainly because this is the exact kind of trade I'd previously taken last month. Yep, price came down, took liquidity off Asian session, and then displaced up, leaving fair value gaps, right? We took liquidity on the 15-minute of this low, pushed up, came down, grabbed liquidity, pushed up. It's Monday, I don't really want to trade no matter where we are, because price could just do anything, and I'll rather much see what price wants to do on Monday and then look for opportunities going forward in the week. Again, right now, what's it going to do? I'm not sure. Maybe it's going to accumulate here and then pull back. Maybe not such a deep pullback. Maybe we'll pull back into this low, take out that liquidity. But at the moment, it does look like it's accumulating, and I would much rather price come, into this low somewhere, especially because we grab liquidity here, market structure shift, it will come back into this 56.18%, and then I can look for opportunities to go long. But it could just push up as well without waiting for me, without waiting for price to pull back, and that's a possibility. I don't really want to be shorting aggressively anywhere around here. Price could easily just continue higher, or it might not. I would much rather wait for signals, that any signs that it's going to hold, rather than aggressively short, because I've done that enough times to not do it again. So let's see how tomorrow plays out. I believe on pound dollar, I wanted to take a short, or I saw an opportunity that I would have previously taken a short, especially price came up and took out liquidity off these highs. On the 1 hour time frame, we had on a 15-minute time frame, we had a channel with a market structure shift, so RSI diverging. We've got channel forming right there. We had the market structure shift, and then I believe I wanted to place my entry somewhere at the 618 pullback, stops above those highs targets there. Let's see how that plays out. It hasn't hit my stops yet. It might continue lower, it might continue higher. So I wasn't going to trade it because it's Monday, and I don't really like the way price has been moving up. It's been aggressively moving up, and I'm expecting price to continue higher before coming back down. Okay, I've been bullish since we've seen this candle that took out liquidity, and I've been predicting price to go high, but I was not expecting it to go high so aggressively today. But I guess it had been playing up to shoot up at one point, especially with all the hold off liquidities from this 1, 2, and then price failing to make a new low, pulling back, pushing up, closing above this high, leaving a fair value gap which came and tapped into or cleared, put in a bullish engulfing candle, and it was just a matter of whether price was going to pull back, or more likely it was going to shoot up, and it shot up today. I just don't know how to trade this. Usually I would be looking to short this, especially because price came into this resistance. Price came up to that high, took out liquidity on the lower time frames, as in the 15-minute time frame. It not even there. I would have been looking at this channel somewhere around here, and I would have looked to go short at this market structure shift. That would have been my entry previously, but I know not to do that anymore, especially bullish order flow on a Tuesday when we've been dying to push up. There's no way I was going to short anywhere near those levels, not on a Tuesday. But yeah, there was literally no pullback anywhere for me to take an entry on the 4 hour time frame. On the 1 hour time frame, this was one of the things that I saw this morning. London session, I wasn't going to enter because London session price was around this high, I believe. Let's have a look. London session 1 hour time frame. Although we've got a high up here, this was another high that I was watching, which price came into, and here price essentially, right, you had a liquidity grab yesterday down there, and then price market structure shift, pulled back below these lows, grabbed liquidity and tapped into this bullish fair value gap, and that's where it found some support, and then shot up. And this was before the London session even opened. And then again, you can see on the lower time frame, this is not the 1 hour time frame, again another liquidity grab right here, market structure shift, pull back, and then boom. And then this is where I was looking to potentially short if I was counter trading, but I don't want to be doing that. Liquidity grab, market structure shift, and this would have been a good entry to go long, because this is where I would have most likely shorted before. And this is similar to the weekly time frame candle that made me have a bullish bias for such a long period of time. It's candles like this, because I was also thinking of counter trading, not actually trading, but have a bias of counter trading in my head from past. Seeing this, I'm thinking it's going to either accumulate, this is accumulation for price to go up and then pull back, or this is just a way for price to accumulate and then pull back and pull deeper before going up. I think one of the key here was the fact that this candle printed during New York session. This, similar to the weekly time frame candle, is a very strong indication of liquidity grab before price want to continue in this direction. And then we do boom, market structure shift. If there's just no holding back, again another channel is in play. Potentially, I'm not looking to counter right now, but we could potentially see a pullback tomorrow. FOMC, we might accumulate somewhere around here and then pull back and then push up. We are approaching on the weekly time frame at a equal high right here, and also we have formed a channel as well. If you look at this, with RSI diverging on a weekly time frame, that's quite a strong pattern. Whether you like traditional patterns or not, this is quite a strong pattern forming, especially as price approaches these equal highs into this bearish fair value gap. I do think, after such an extension since January, since the start of this year, we are going to see some kind of a pullback, and it is approaching a level that will allow it to find some kind of resistance. So yeah, although bullish right now, we could potentially see some bearish moves coming in once price reaches these levels. We've got a few more months left in the year, so let's see how that plays out. Pound dollar, like, I wanted to just look at something, right? Previously we put in this head and shoulder pattern. If you look at this, this is a channel on the daily time frame. It came into quite a strong level as well, looking left, took out some liquidity, channel formed, RSI diverging. If you look at this on the daily time frame, head and shoulder, from that peak it dropped, pulled back, dropped, and here we had the head and shoulder, but it dropped too deep into a support level for it to find continue lower. So now we've got the reverse head and shoulder, left shoulder, head, right shoulder, and it is looking to, it's just closed above those neckline, and most likely it could potentially pull back into this range, into this support during NFP tomorrow, NFP FOMC tomorrow, or even sometime later. And then if it drops into this level, then we can think about price continuing up to these highs. But without a pullback, I don't really want to be trading. 1 hour time frame, I wasn't really interested in trading anything here. Today I saw this pattern and I was thinking, 1 hour channel, this right now is forming, it's a channel is forming, right? But I was looking at this smaller channel during New York session and thinking, there's a potential opportunity to go short right now, right there. Market structure shift, go short, would have been stopped out. Again, it's not an entry that I want to be taking on such a strong bullish order flow. However, like I said, we could see a pullback somewhere. This channel is forming, price is losing momentum. We are approaching this swing high below that daily time for fair value gap, and we might find some kind of resistance. But until then, I'm not really interested in looking at any trades. I do think we've got a better channel forming as price approaches that level. Right now, I'm forcing a channel, whereas let's just let it play out, let it pull back one more time and then push up to those highs. 7 p.m. FOMC, so I'm most likely not looking to trade tomorrow, but I'll just be watching the market, because ideally I want that channel to form, drop into these lows, and then look for an entry to go long. Wednesday 17th of September, FOMC day. Euro dollar, I've been bullish this week, and I was looking for bullish trading opportunities today, but I didn't want to trade before FOMC, because I'd much rather wait until post FOMC to look for any opportunities to go long. Daily time frame, I am expecting price to come up to these highs. We've got these equal lows there, which is below this monthly time frame fair value gap, which I believe is a very good location for price to come into and find some kind of resistance or an area of target for price to reach. We've had quite a few bullish days in a row since last Thursday. It's quite a strong bullish day yesterday, and again today you can see it is pushing up at the moment after FOMC. I didn't really want to trade before then. There were potential opportunities to go long. We had this bullish fair value gap. However, because we just closed above that buy side liquidity, I was expecting maybe some kind of a deeper pullback, especially with FOMC coming up. Maybe it could have, dropped before pushing up, but no idea. So I'd much rather wait for FOMC to come out first and then look for opportunities to go long. But here you can see, it pulled back into that 50%, tapped it once, tapped it twice, and then put in that bullish candle. My main reason to go long at that level was because we had this low as well, at the below that 50% of that fair value gap. We had the 60-minute low right here. Price came into that level, especially with market structure shift during New York London session. We grabbed liquidity off this high on the 15-minute time frame below that fair value gap. Right, that fair value gap tapped and then dropped, and I wanted to take a short right at this level because we just closed above a buy side liquidity. It's a resistance level. We just put in essentially a double top, closed below that double top, and again we had that clear drawn liquidity at that level, and this is something I wanted to go short at here, but I didn't want to because we're in a bullish order flow, FOMC later, so it's not something I really wanted to trade. However, after price did reach that level though, then the way it approached that level, so liquidity grab, liquidity grab, liquidity grab, like this is a really nice flag pattern if you trade a flag, or just loads of liquidity grabs at a key level on the 60-minute fair value gap below swing low and the 240 fair value gap 50%, and then price put in this inside bar, bearish pin bar, bullish but bearish looking pin bar, followed by this liquidity grab off this low and then displacing up. And I think that was a good opportunity to go long if I was not waiting for FOMC in the evening. So this market structure shift and then pull back, and then that's the trade right there. I think would have been a good trade, but because of FOMC, I'm not really interested in going long at that time. Hang on a second, they've cut rates. They didn't hold rates. They forecasted at 4.25, which is in line with forecast, and they dropped it by 0.25%. And euro is booming. I'm just going to wait for a pullback. There's no way I'm trading at that high, right? You can probably trade on the 5-minute, not trading up here. Imagine you want to trade here. Like, what's going to happen? Okay, let's just leave that there. We'll come back tomorrow and see. Okay, I expect price to go up to this high at 50%. Let's just leave it there. Where do you want your stop? Okay, let's just have it 1-to-1. Let's see how that plays out tomorrow or later tonight. I will be trading the pullback if it pulls back. I do have to emphasize how good of a trade this potentially was. We had a very strong order flow going up. There were no signs of any bullish order block being held or like any bullish candles forming that failed to continue, because in those cases I've seen a deeper pullback, whereas because there were no bullish candles here followed by bearish candles, kind of a good clue that we might not pull deeper. And 60-minute, this pattern right here pushing up and then just price slowly coming down to this low and then displacing up, I think was a much better sign that we could potentially not continue lower, and then the opportunity to go long is somewhere around there. And that pull back to the 50% off that range, or even 618, came down to the 618 and stops below this low. If you wanted to put it below that fair value gap, and then 1.5% risk reward, I wouldn't have aimed for that, because you never know whether it's going to go up there or just take the low hanging fruit first. This is how NFP has played out. I did say not to take a trade up here, which I might have done in the past, and then I saw price move lower. This is a 5-minute time frame. It was this bullish candle that failed to hold that made me think price is going to drop lower. However, because I had my mindset on going long as price dropped into that 618, for some reason I dropped into the 1-minute time frame and saw price hold this level with this bullish engulfing candle, and then I went long just there, after which price just dropped. Honestly, I don't know why I dropped to the 1-minute time frame. I was not paying attention to the trade or charts. I was doing other things, and then when I saw this on the 1-minute time frame at that pullback, I immediately went long on one of my accounts, and then that got stopped out. And as price came down to this low and took out liquidity here, I went long somewhere around here, and then as price moved up, I took the trade off immediately because of the way price has displaced lower, closing with this strong bearish engulfing liquidity candle at quite a premium on a higher time frame. I'm not really expecting price to continue higher anytime soon. I expect it to drop lower. Look at this bearish engulfing candle, this forming on a this is happening on Wednesday right at the moment, so I am expecting some kind of a pullback. We'll see how that plays out, but this is a candle that I don't really want to be trading against on a bullish order flow at such a premium. But yeah, waited almost all week to trade. It's Wednesday evening, waited until FOMC was over, which is good, but I did rush into the trade as soon as press conference started at this pullback. I mean, I traded on the pullback, which is good. I only risked 1%, which is good. I had a stop loss, which is good. All three principles were met. It's just not somewhere I wanted to trade, and I knew that as well. This has happened again, where I'm waiting post news. As soon as news comes out, I'm looking to enter as quick as I can, because I've waited all week to trade, so I deserve to be in a trade immediately after that. So that's a mindset I need to shift away from. So yeah, let's see what tomorrow does. It looks like we could pull lower first, and then from there we'll see.
This is how it looks like the week's going to be closing. We tapped into these equal highs, which happens to be exactly at that monthly time from fair value gap, and displaced lower quite strongly on the daily time frame, 4-hour, 1 hour time frame after FOMC, which was exactly an area where I started to look for long after FOMC. So sometimes, yeah, you're just wrong. But we got this channel played now on the weekly time frame with RSI diverging, and that is quite a strong pattern at a key level after a whole year of a bullish leg. This is January around here, all the way up until September. I do think we will see some kind of a pullback into this area, but that's a long-term play, a few weeks to months. At the moment, we need to get through here. But let's just see what happened after FOMC. FOMC candle, this bearish engulfing liquidity candle, such a key level, right? Weekly time frame channel at a equal high below a monthly time frame fair value gap. With that candle, you are going to be expecting some kind of bearish momentum. Price displaces lower with a bearish fair value gap right here. After seeing this bearish engulfing candle, there's no way I'm looking to be going long on the opposite side of that candle, because it's such a strong bearish candle that no matter how much of a bullish momentum there was, there's no way I'm trading that. Especially, this is something I noticed before. I would have, something like this where price makes a bullish leg, pulls back, there will be like a bullish candle around here, and then price fails to continue higher. In those cases, I've seen price normally just comes down, takes liquidity, comes down, takes liquidity, and then on the third one, it finds some kind of momentum that pushes price up. This is usually in a bullish order flow. Whereas here, what we've done, we've pushed up, pulled slightly deeper, tried to push higher, and then just went rejected all the way to the highs at key level, and then closed completely down. After seeing that, that was just completely against this bullish order flow leg that I normally look for, and this went completely against that. And because of that, there's no way I was looking for any reason to go long. Even after seeing this bullish engulfing candle, in a bullish order flow, you see that candle, you think that's a very decent candle to take a pullback trade on, but that was really not even convincing for me to go long. And then after that, we had this bearish engulfing candle that almost closed below this candle, but on pound dollar I know it did, and because of that, on pound dollar I was looking to go short on a pullback. He never pulled back, unfortunately, and it didn't really give me a trading opportunity. Price did come down to this swing low, which also happens to be at daily time frame fair value gap 50%, and while there was no patterns for me to look for long, price put in this bullish pin bar with this low wick, and that was kind of telling me maybe we are going to trade inside this range, inside this wick the whole week, this week, or especially Friday, going into Friday. So wasn't really sure what was going to do. However, I was looking at this price pulling back into the range of 50% above this high, which it never does today, so there were no trades for me. It just comes up, takes liquidity off this high, displaces lower, comes up, takes liquidity off this high, and then displaces lower, market structure shift, and then continues lower. To me, that was not really a trade to go long. I really wanted to go long Friday later on though, however, because of the way price started to slowly move and make its way down into this low that it created on Thursday, this low right here. But it doesn't come at any pattern, at any channel or anything. If they come at the bottom of a channel, then I'll be more inclined to go long. However, it's just at a not really very interesting low. So yeah, this low that price formed, I quite liked. I would have liked it if there was some kind of a channel. There wasn't, which is fine. It's the way price started to push up and then just slowly make its way down. Because of that, I wanted to trade at this low. We had this accumulation, manipulation. However, to me, it was not really persuasive, the way price approached this low. Therefore, I didn't take a trade on here because I've already taken one trade. My rule is to take no more than 2 trades a week. No trade on euro dollar. However, I did take a trade on pound dollar Friday evening, so we'll talk about that. This is what pound dollar looks like at the end of the week. Come on, man, look how strongly bearish all of a sudden it turned after FOMC. We were pushing up and up and up. I even said we got this head and shoulder price close above, and that play is still in play, by the way, that pattern. And because of that, and price pulling back into this fair value gap right here below this swing low, so we had this swing low and then a fair value gap right there, was one of the main reasons I was looking to go long today. There was a potential pullback trade here, but it never pulled back into the level that I wanted it to pull back to, so I couldn't really enter the trade. Like I said, this is bearish engulfing liquidity candle. After this bullish engulfing liquidity candle, that failed to hold, and I wanted price to pull back into this level here on the 1 hour time frame. It never does, it just displaces lower. And again, this morning I really wanted price to pull into this high, which it never did, and then just continued lower. And the way it's continued down, like I said, channels, I trade channels, and the way it came down on that 15-minute time frame, I was looking at a channel from all the way here because RSI diverging is all the way from here. Main reason I took a trade was because although we've got a big channel in play, we've got another little channel right here also in play. Let's get rid of this big one. This one, and this one is a small one, but RSI is diverging from this low all the way to, this low, and it's the way price approached that daily time for fair value gaps 50%. Just before that, we had an accumulation inside this range, then another accumulation, and then another accumulation. I wanted to take a trade here after seeing the first accumulation, and I know I do that enough times, and it always goes in the other direction. So I wanted to wait. I wanted to see more from price. Then I saw this bullish candle, some other accumulation to me, and then this candle as it starts to close bearish, because usually after that is when you see a bullish engulfing candle, and I traded as that candle at the low was making a low. So yeah, this is where I put my initial, I said I was initially going to trade. I didn't trade that because I didn't want to trade there. I wanted price to pull deeper, and as it pulled deeper, I took a long somewhere around here, and then my target was just above this high, 18 pips. Happy with that. 12 pips to the top, 1.44R risk. Couldn't get any better than that. I know it's an aggressive trade, but it's a very nice pattern at a key level, especially a double channel. I quite like those with 2 accumulations along the way. And on a Friday at around New York session, to me that's a very good trade. And after I took that trade, I saw price push up, put in this bullish fair value gap, and then I was thinking, oh, if I hadn't taken this trade, I might take a trade as price pulls into this fair value gap right here. It comes into this fair value gap, and I would have entered around here. So I just placed this. I didn't really enter. I wanted to see in which direction price goes. Currently it's going against me, so yeah, quite a strong bearish order flow. On a 15-minute, I'm trading a channel. Don't need to go any higher than where I did. You never know if price is just going to reject this fair value gap and then drop lower. All I know is I followed my principles, entered. There was no pullback to enter on this one, so that's fine. Entered with a stop loss. I had my stop loss set immediately. There's no way I'm taking any more than the loss I was prepared to take. The 1% risk. I risked 1% on one of my accounts, but 2% on the other one, because I thought I was risking 1% on my smaller account based on the position I calculated on my bigger account. So even then, I was actually okay to hold that trade of 2% risk, because I'm quite confident in this pattern that majority of the time this pattern plays out at a level like this with the double channel with 2 accumulation, and also on a Friday. And the weekly time frame order flow for me has been bullish, even though we've started to go bearish sometime midweek. I know it's going to find some kind of a bullish momentum there, a bullish push up there, and I was okay to risk 2% on that. So that was a trade for this week. The other trade, yeah, I think somewhere around here would have been a good trade on a 15-minute. I think entered immediately after this bearish engulfing liquidity candle probably was a good opportunity to go short. I think that was the pound interest rate news, and then aimed for, you don't know where it's going to go, right? I would probably aim from down here, because, well, how am I supposed to know it's going to go all the way down to that thing? But yeah, and then no pullback, such a strong displacement, no waiting around, which was annoying, but that's what it is sometimes. Price goes against you very quickly, or in the predicted direction that you predicted in very quickly. You just don't get the entry that you need. So yeah, let's see how next week plays out. I'm expecting this channel on the 60-minute, there's a 60-minute channel forming just there on a Monday, and also another channel forming on this 15-minute time frame. I do think we might get price push down and then hold a channel and find some kind of bullish pullback, but it is a bearish week next week, so we've got this strong bearish engulfing liquidity candle after a channel forming, right? Look at this opposite channel, head and shoulder, or maybe this head and shoulder, this bearish head and shoulder is in play now. But I will be looking for bearish trades next week, especially somewhere down to these lows. So Let's go.